Thank you very much, Mike. So in the next sessions, we are honored to ask Inamura-san, head of the Market Infrastructure Divisions, the Financial Markets Department at Bank of Japan, for the keynote speech for this panel. Inamura-san, please.
Thank you very much for your introduction, Yanagisawa-san. I appreciate this opportunity to appear in this virtual conference and to make a brief introductory speech for the panel discussion on the Yen LIBOR transition. And I also would like to express my gratitude to FIA Japan and the organizers for this excellent arrangement of the event. So let me start with a good story. I believe January 25th is a memorial date not only for derivatives market players, but probably for all those who have involved in LIBOR transition. On that day, both the Easter fallback supplement and protocol came into effect. As a result, the fallbacks are to be incorporated into all new IBOR derivatives that reference Easter standard definitions. Also, the fallbacks have become effective between parties adhering to the Easter fallbacks protocol for legacy derivatives entered into before January 25th. Thanks to these fallbacks language, once the cessation or the pre-cessation LIBOR is triggered, these derivatives contracts are to convert from LIBOR to the risk-free rate, which is TONA in the yen setting. What is undeniable here is that more than 13,000 entities have signed the fallbacks protocol on the global basis as of the end of this February. Taking a closer look, we notice that the name of the vast majority of major derivatives players and the Japanese jurisdiction are also put on the list of those entities adhering to the protocol. This implies that a large amount of legacy interest rate derivatives for Yen LIBOR are now covered by this protocol. I think this is quite an achievement to be applauded by market participants, including those who have attended today's conference and signed the protocol, given the fact that derivatives outweigh cash products in terms of the amount of the exposure referencing to LIBOR. So it can be safely said that we have seen great progress from the successful introduction of the Easter fallback supplement and protocols. That said, we should also understand that fallbacks are fallbacks, a so-called safety net, even though it's a very critical one. So what is needed in addition to the fallback is active conversion. Market participants in the derivative space should actively transition away from LIBOR to alternative benchmarks before the fallback rates are actually applied. Such an active conversion will bring you a benefit because you can have more control over the deals in such a way that the economic value of the deals achieved through the conversion should reflect real-time economic and financial conditions more precisely than the fallback rate would do. In this connection, I would like to stress on the importance of the departure from the use of Yen LIBOR swap, which should be one of the issues to be discussed in the next panel session. I hope the audience in this conference today are eagerly considering a swift transition away from Yen LIBOR swap in search of more certainty in your LIBOR transition and more precise economic value in your transactions. The active conversion from Yen LIBOR swap is also desirable from the whole market point of view. First of all, it will surely make for the realization of orderly wind down of Yen LIBOR in the swap markets by letting us avoid everyone's making a last-minute rushing move at the end of 2021, which may adversely affect the entire market condition. Secondly, the active conversion will make for the more strengthening of yen overnight index swap market by transferring at least a certain amount of the transactions from Yen LIBOR swaps to the yen OIS. That will in turn become a further support of the term TONA, which are calculated based on the OIS rates. In that connection, I would like to note that cross-industry Committee on Japanese yen interest rate benchmarks already set a milestone for the preparation of system and operational arrangement designed for transactions of TONA compounded in arrears, which is by the end of this March. In addition, the development of TONA index, similar to SOFR index or SONIA index, is now put on a fast track, which will be realized and made public in the near future by the company Quick. So here my point is that the environment for using TONA compounded in arrears will be much more developed in the not so distant future, which should encourage more market participants to consider the active conversion from Yen LIBOR swaps to Yen OIS. I'm afraid some people may be against my points, arguing that difference in the cessation timing between the US dollar LIBOR and the other four LIBORs prohibits market players from active conversion. I'm skeptical of the theory. After all, we all know that the principle of no new LIBOR, including the US dollar LIBOR, applies after the end of 2021, because the US authorities have made it clear that the US dollar LIBOR settings proposed to continue beyond the end of 2021 would be only for use in legacy, but not new transaction after the end of 2021. So now let me close my speech. Obviously, we still have plenty of work to do before the end of 2021. However, the time frame given to us is very tight, as we have less than 10 months left before this endgame is over. So please avoid the fallacy idea, such as, let's wait and see, someone, including the authorities, will come to help and guide you in the end. This is completely not the case. Those who have been left behind in the work of LIBOR transition will be surely put to a great trouble in the end. In the coming up next panel discussion, many important topics and themes related to Yen LIBOR transition will be taken up by highly professional market participants. I believe that library talks and exchanges of viewpoints in the panel discussion will give you more awareness and more insights for your LIBOR transition. Thank you very much for your attention to my speech.
Thank you very much, Inamura-san. It was very insightful speech, and it's great introduction to the next panel. I repeat Inamura-san's word. Let's wait and see. Someone, including the authorities, will come to help and guide you in the end. This is completely not the case this time. And we only have 10 months left. So all the market participants and the firms related to the market, including technology vendors and the law firms, accounting firms, and shall keep in mind this. Again, thank you very much to Inamura-san for the great speech. Okay, so let's move on to the panel. Welcome to the panel discussions of the transitions away from the LIBOR and the implication to the futures market. We had a lot of cover today, as Inamura-san mentioned. In Japan, the Yen LIBOR transits to the OIS. It's a part of the global LIBOR transitions to new risk-free rate. Globally, the US dollar overnight index will be the SOFR, and the euro will be the ESTA or Eurostar, and the GBP to the SONIA. Each country and the jurisdictions are actively working on the LIBOR transitions and the sharing up to date the color to the multiple channels. Especially in US, transition to the SOFR making a good progress, and its futures market is getting more active. I see the Japanese banks start trading the SOFR futures contract recently. So with in mind of those today's event subtitle, Establishment of Japan as the Global Financial Center, we would like to focus on the LIBOR transitions activity in Japan and take this opportunity to broadcast to the global channel. All panelists here today are the Japanese, but the discussions will be done in English and they deliver our voice directly to the globe. So I'm the moderator of the panel, Shun Yanagisawa, and the board member, vice president of the FIA Japan, and the chair of the operations committee, and head of the Japan Futures Clearing and FX Prime Brokerage business in the Citigroup. On this panel, we are fortunate to have the industry expert from the JSCCs, TFX, Citi, and Morgan Stanley. Okay, let me introduce. So the first, Hosomura-san, and from the JSCC, the Japan Securities Clearing Corporation's executive officer and clearing, planning, and OTC's derivatives clearing. And next, Seo-san from TFX, Tokyo Financial Exchange, and head of wholesale business department. And Watanabe-san from Citigroup, director, markets planning and control, and regulatory specialist. He is the co-chair of the term rate subgroup at the cross-industry committee of the Japanese yen interest rate benchmark. And Tomiyasu-san from Morgan Stanley MUFG Securities Japan, managing director and COO of the fixed income and FIA Japan Tokyo International Financial Center committee chairpersons. In derivatives markets, most of people knows about their names. And I'm personally very excited to have this panel discussions with these members. Okay, so let's talk about the first thing, the Watanabe-san's. Starting from the introductory questions. Can you explain the current discussion status of the LIBOR to the risk-free rate in Japan? Watanabe-san, please.
Sure. So the 3 key discussion points in derivative space. First is transition plan for derivatives. As Mr. Inamura of Bank of Japan addressed in his keynote speech, the vast majority of major derivatives players adhere to the 2020 IBOR fallback protocol, but that's not the end of story, but the beginning. As a next step, the key focus is moving from fallback into the active transition before the date of permanent cessation of Yen LIBOR publication. We now need to accelerate the pace of active transition from Yen LIBOR into TONA with a clear milestone for the derivatives. The key questions here, first, by when should the market makers in the interbank market change the price quote practice from JPY LIBOR-based into TONA-based? Second, by when should the market participants suspend initiation of the JPY LIBOR-based derivatives? And third, by when should the market participants substantially reduce the amount of Yen LIBOR referenced derivative exposure? The roadmap for LIBOR transition in derivative space is currently under discussion. Number 2 discussion point is forward-looking TONA term rate, so-called TOF. TOF for 1, 3, and 6 month tenors are currently published for indicative purpose only. Given the strong demands by market participants in cash products such as notes and loans, the next step is to publish TOF for production, i.e. for the market use. Since the TOF is derived from the market data of TONA OIS in the interbank voice broker market, it is imperative for market participants to trade TONA OIS much more actively and aggressively. The cross-industry committee is still aiming at the publication of TOF for production as early as possible, but no later than mid of this year. the cross-industry committee is under discussion on what would boost the level of market activities in the OIS market. The key questions here are, number one, would the big bang approach like a TONA first as the bid offer quote practices in the interbank swap market make sense? Number two is, how would we change the current market practices from bid offer quote without specifying the notional size into the quote with a specification of the notional size in TONA OIS interbank broker market? And third, with the initiation of the central limit order book of OTC TONA OIS on electronic trading platform would help. How to activate the TONA OIS market is under discussion. Number three is TONA index. As Mr. Inamura of Bank of Japan pointed out, TONA index is under development. TONA index is equivalent to SONIA compounded index in UK and SOFR index in US. The aim of TONA index is to simplify the calculation of compounded interest rates, and in doing so, provide a standardized basis through its publication as an official source. Conceptually, the TONA index is equivalent to a series of daily data representing the return from a rolling unit of investment earning compound interest each day at the TONA rate. The change in the TONA index between any 2 dates can be used to calculate the interest rate payable over that period. TONA index may be welcomed by market participants in Japan. Daily compounding calculation of TONA could result in a tiny amount of difference in floating rate amount at the end of the coupon period between the two counterparties under the non-cleared bilateral transaction in OTC market. The reason for the difference in the coupon amount is often due to the difference in number of decimal points places for rounding in the coupon calculation between the internal system at those two counterparties. By considering the zero tolerance culture on one end difference at the reconciliation of coupon amount in Japan, I would expect a popularity in the use of TONA index in the non-cleared OIS with end user client, as well as other related transactions, which are referencing a TONA daily compounding setting in areas. By following the SOFR index in the United States and the SONIA compounded index in the UK, the TONA index is under development to increase the usability of TONA daily compounding setting in areas. Back to Shun.
Okay, thank you very much, Watanabe-san. Yeah, Japan's zero tolerance culture, it can be challenging. Okay, so moving on to the next questions. So we understand the development of the new benchmark of the forward-looking TONA term rate and TOFU, but still have the several benchmarks in Japan, and it's a bit confusing. So I'd like to ask a question to the Seo-san, the TFX. So the Seo-san, can you explain the difference and the feature of each benchmarks, TONA, TOFU, and D table, Z table, yeah, those benchmarks? Seo-san, please.
Yes, thank you, Yanagisawa-san. I guess that not all the viewers are familiar with such kind of Japanese yen benchmarks, interest rate benchmarks. But now we have used some major Japanese yen interest rate benchmarks, Japanese yen LIBOR, Euro yen TIBOR, and then Japanese yen TIBOR and TONA. The former three benchmarks, LIBOR, Euro yen TIBOR, Japanese yen TIBOR, are very similar. We call them IBORs. These IBORs methodology is designed to produce an average rate that is representative of the rates at which large leading internationally active banks. And on the other hand, TONA is released by the Bank of Japan based on the market data itself. That is the first difference. And the second difference is that TONA is now overnight rates as it is. While IBORs, LIBORs, and PIBORs, these existing interest rate benchmarks have a term structure, 1 month, 3 months, 6 months, and so on. Such rates include those with tenors and referencing existing some contracts like loans, derivatives, like that. And thirdly, as LIBOR and TIBORs include bank credit risks, and they are calculated from estimates submitted by the leading banks, as I said, while TONA is recognized as a risk-free rates. This is a third point. And then, as you know, IBORs are broadly used, often referenced in derivatives, bonds, and loans. But IBORs had some problems, fraud, because they include credit risks, and it has got difficult to get enough market data. The underlying funding market is very quiet now. Then the market needs new benchmarks, and then we need such kind of benchmark reforms. The Financial Stability Board, FSB, published a report in year 2014. In the report, the FSB recommended to improve reliability and robustness of existing LIBOR and TIBORs, and developing new risk-free reference rates, risk-free rates, without bank credit risks. And as you know, concerns about the sustainability of LIBOR beyond the end of 2021 have rapidly highlighted. And we need new benchmarks. And now, as Watanabe-san said, TONA is risk-free rates and used for OIS, overnight index swaps, with a method of calculating the applied interest rate by accumulating overnight full rates through daily compounding from the beginning of the calculation period to the end of calculation period. The problem is that the applied interest rate is fixed at the end of the date of the calculation period, say fixed in arrears. LIBORs and the TIBORs, on the other hand, are fixed in advance. This is a very important point of cooperation. And this is a fourth difference. Then the market is developing a new term reference rates, and now I'm coming to finally TOF, Tokyo Term Risk-Free Rate. It is a method to develop rates based on actual market data for Japanese OIS market. And it is a risk-free rate because it's based on OIS. These rates have a term structure and reflect the forecast for future interest rate. The applied interest rate is fixed in advance. This is important at the beginning of the calculation period. Still, the problem is liquidity in the OIS market. Thank you.
Okay, thank you very much, Seo-san. Now we understand the difference of each benchmarks and its terms, and the forward-looking or the backward-looking. Okay, then, so I feel curious about the current Japan OIS market. So OIS is the key, and so what's going on in the OIS market, and what's the current challenge, and how to create liquidity? So I think the best panelist here to answer these questions is Hosomura-san from the JSCC, as he has been a key person in the JSCC since its OTC derivatives clearing launch back to the 2012 rounds. So the Hosomura-san, please.
Thank you, Yanagisawa-san. JCC started clearing Japanese yen LIBOR interest rate swaps in October 2012. Now we have 25 clearing members and about 100 clients. A broad range of users, both domestic and foreign users, use our services. We have continuously expanded the scope of products that we clear. Speaking of Japanese yen interest rate swap, we started clearing for TONA compounding OIS in 2014, in addition to LIBOR and TIBOR. Currently, the vast majority of trades we clear are LIBOR-based trades. Looking at 2020, the share of LIBOR-based trade was 87% in value and 91% in trade count. In comparison, during the second half of fiscal year 2020, up to the end of January, the OS share was 8% in value and 2.5% in trade count. However, we do see that the OS share has been increasing as it was 2% in value and 1% in trade count in 2019, but it is still limited when compared to LIBOR. Unlike overseas CCPs, JCC adopted TONA as a discount rate for NPV calculation ever since we launched the IRS clearing services. Therefore, we are in a better starting position for managing the LIBOR transition when comparing to other CCPs for USD trades that had to change the discount rate to the risk-free rate. However, in reality, we have not seen a meaningful transition of liquidity from LIBOR to OIS. OIS is expected as one of the alternatives for replacement of LIBOR IRS after LIBOR cessation. Therefore, JCC has been making various efforts to facilitate the transition. Specifically, we have expanded the scope of OIS we clear. For OIS coupon payment, we have added 6 months, 3 months, and 1 month, in addition to the annual payment cycle. We also enabled clearing basis swaps between LIBOR and TONA compounding OIS. Furthermore, we started providing a risk transformation services. This is part of the compression service, and it allows for the termination of LIBOR swaps, replacing them with new OIS. To improve the liquidity of OIS trading, we would like to do whatever we can as a CCP. At the moment, ISDA is having discussions on the addition of new OIS conventions to its definitions. Taking account these trends, we would like to consider future actions for OIS market. As an alternative Japanese yen interest rate after LIBOR cessation, TIBOR could also be a choice in addition to TONA compounding. Also, we anticipate the use of TOF, which is a new term risk-free rate that is now in the preparation phase. We would like to structure our services to take into consideration various possibilities so that we may assist the market to clear OIS, IRS appropriately after LIBOR cessation. Thank you.
Okay, thank you, Hosomura-san. Unlike overseas CCPs, we understand JSCC's adopted TONA as the discount rate. Yeah, so it's very relatively better positions for the managing the LIBOR transitions. Yeah, although the mechanism is ready, but liquidity of the OIS is the challenge. So liquidity. So how the bank adopt new risk-free rate. So will the bank hedge the regular swaps and run the TONA or TOF risk? Will the TOF TONA trade in the broker market? So I'd like to ask this question to the Tomiya-san, the COO and fixed income at Morgan Stanley. Tomiya-san joined FIA Japan last year as the board member, and he brings his expertise in the fixed income derivatives to us. So Tomiya-san, please.
Okay, so TONA basis, my answer is yes, it's going to be traded eventually, but I think it will take some time. Theoretically, those two rates are similar, so there shouldn't be any large differences. But if you remember the CCP basis, like 7 years ago, 8 years ago, nobody thought that those two rates, LCH, LIBOR, JSCC, LIBOR could diverge, could be different that much. But after several years, the difference became wider. And if you remember the 2018 January, it went up to 15, 17 basis point in a 30-year point. And then dealer has to make markets for both separate market. And the first dealer needs to take some reserve, VA, and then they need to introduce a proper curve, separate curves for both rates. And then there are some risk limit, and also this is incorporated into a VAR model, and it's also included in the capital calculation. So everything, was captured. This basis was captured in every single systems. And similar thing happened for D TIBOR and Z TIBOR last year. We had a sudden difference between two rates. These two rates are also very similar, but the difference became wider, and dealer has to make markets and then also quote the different rates, introduce the proper separate curves and reserve the difference. And also it's also reflected in the risk framework. So I think similar thing will happen to the TONA basis, and it's going to be traded so frequently because the dealer has to have a risk limit, and they have to hedge the risk, and they have to quote the difference in the basis market. So I'm sure that it's going to happen, but it's not happening right now, and it's going to take probably 6 months, at least 6 months to 1 year. If you look at the US rates, SOFR swaps, it's still in the early stage, and sometimes the bid offer is wide, like more than 1 basis point at some point. So even in the US, SOFR liquidity is not that much, and in GBP term risk-free rate is not, there is not huge demand as of yet. So I think we need some catalyst to enhance the liquidity, which may not happen until June, second quarter. But after the second quarter, many market players are shifting to new rates in loans and cash products especially. So if that happens, I think there will be a more market and liquidity. And once it happens, I think it will quickly move to a new rate, and these basis market will be more and more popular. That's it. Back to you.
Okay, thank you. Thank you very much, Tomiya-san. So understand the basis between the different benchmarks, and it could arise. So we had the experience in the past in the basis in the theoretical the same or very similar the curve, like the D TIBOR, Z TIBOR issue, or the Yen, the JSCC and LCH basis issues. So there's many basis risks there. So the liquidity is the key for us, and and also the OIS is daily compounded use for the derivatives markets, and TOF used for the loan or cash products. So the resulting TONA basis markets may arise, and liquidities may be coming in towards to the benchmark shift. So considering that liquidity, and generally speaking, the futures contract provides the liquidity, and the futures is good for the price finding tool. So I understand there are the discussions to launch the risk-free rate futures in Japan. And so what's the futures contract will be? So I'd like to ask Seo-san, so the head of the wholesale market of the TFX for the risk-free rate futures. So Seo-san, can you explain the brief about the contract specifications that you are planning to launch in the futures?
Yes. I'm CEO of Tokyo Financial Exchange, and TFX used to list overnight call rate futures. But currently, these futures are suspended because of low demand. But yeah, we understand that futures is important as well as OIS market for this new benchmarks. And the TFX has discussed new TONA futures with market participants many times in our working group. So Tony, can you share the screen for new specs or new contract specs for, this is a draft of our new 3-month overnight call rate futures as we discussed in our working group. According to the discussion, contract specs as on the screens, this 3-month overnight call rate futures underlying asset is compounded daily uncollateralized overnight call rates. And each contract month has 20 quarterly months in, say, 5 years. And this is just like SOFR futures in CME. And now we have another candidate for new overnight call rate futures. Please go to the next page, Tony. This is a 1-month overnight call rate futures. This is just an idea of draft. This is just 1 month call rate futures, and underlying asset is an average daily overnight call rates. And then a contract month has near 7 calendar months, just half a year. And this 1 month call rate futures covers front end of OIS curve or TOF, and the 3 months overnight call rate futures can cover a 5 years term. So we discussed these two call rate futures in our working groups. But we are a bit difficult position currently because overall Japanese yen interest rate market is very quiet, not active, and then TFX is struggling in the market, and now wondering whether we can keep maintaining its Japanese yen interest rate futures market, including these kind of TONA futures and an existing current type of futures. We need market volatility, and then we think that we need enough volume in OIS market first for TOF, and before our future TONA futures market. But this is FIA Japan conference. So we understand futures is very important for these kind of Japanese yen benchmarks. And please support futures market, everyone. Thank you.
Thank you, Seo-san. Thank you very much. So in summary, the 1 month overnight rate futures use the average rate, and 3 months use the compound. So it's aligned, the contract specifications, the perspective, it's aligned with the SOFR 1 month, 3 months to the futures contract at the CMEs. And I think it's favorable to the market participants, I assume. So it's a great product, and we need the market, more market participants to join and support the TFX, the futures contracts launch.
Thank you.
Okay, thank you very much. All right, let's move on. Yeah, okay, so the deep dive a little bit. So the fallback and the cessations. So its timeline. So I'd like to ask this exciting question to the Watanabe-san. She is regulatory specialist for the uncleared perspective, and Hosamura-san's JSCC's executive officer for the cleared swap market perspective. So starting from the Watanabe-san, please.
Sure. So in the space of non-cleared OTC derivatives, the majority of the LIBOR reference transactions are subject to the ISDA derivative fallback languages, assuming that both of the counterparties adhere to the ISDA protocol. The fallback, therefore, will be triggered upon the public statement to be made by either by IBA on the scheduled permanent cessation of LIBOR publication, or by UK FCA on the scheduled permanent cessation of LIBOR, or LIBOR becomes no longer representative. The public statement may be made soon for all the 5 currencies of 7 tenors soon. Upon the public statement, the fallback provision will be triggered, but will not fully become effective. On the fallback trigger date, a value of spread adjustment to the risk-free rate daily compounding setting areas will be fixed for each currency/tenor of LIBOR based on the 5 years median of the historical LIBOR versus risk-free rate spot spread. In the case of the JPY LIBOR, the fallback will be fully effective on and after January 1st, 2022, most likely. 10 months to go until the permanent cessation of LIBOR publication in the form of a Panama Bank. Given the limited timeline, let me please raise the 2 potential challenges on whether the market will be able to meet the deadline. Number 1 challenge is payment -2 operational issue. For example, in the case of hedge swap associated with the structured notes or loans, swap part is subject to ISDA derivative fallback languages. After the fallback effective date, floating rate fixing will be possible just 2 business days prior to the coupon payment date under the ISDA fallback. Floating coupon amount of the notes or loan part, however, not may be able to be fixed, reconciled, and paid within 2 business days in the same way as in the hedge swap due to the operational constraint at the local bond or loan payment process. In such case, the bilateral negotiation to amend the ISDA fallback languages to allow the parties to spend 3 or 5 business days instead of 2 business days prior to the payment date may be required. Number 2 challenge is non-linear derivatives. For example, constant maturity swap referencing JPY LIBOR Tokyo swap reference rate, i.e. LIBOR TSR, published by Refinitiv for 1 year into 40-year tenor, which is out of scope from the ISDA protocol because the swap does not reference LIBOR itself, but references LIBOR swap rate. LIBOR TSR is also used for the cash settlement of JPY LIBOR swaptions widely. JPY LIBOR TSR, therefore, is a critical benchmark for the long tenors over 1 year JPY derivatives market. Once the JPY LIBOR will no longer be published, JPY LIBOR swaps may no longer be traded, i.e. no longer the LIBOR TSR will be published. The alternative benchmark of JPY LIBOR TSR could be TONA TSR. The TONA TSR, however, has not yet been published at this moment. In order to publish the TONA TSR as a robust benchmark, the market liquidity of the over 1 year tenor TODA OIS market need to pick up. The implication is we need to boost the TONA OIS trading activities, not only for the short tenor, such as 1 month to 6 months from the perspective of TORF, but also the longer tenor, i.e. 1 year to 40 years from the perspective of TONA TSR. So that's for uncleared swap. So over to Hosonomura-san for clear.
JPY LIBOR is expected to be discontinued permanently at the end of 2021. JSCC has been discussing with its members on the premise that the switchover to the ISDA fallback rate would happen on the date of LIBOR cessation. However, recently, other major overseas CCPs have proposed a one-time conversion of LIBOR trades to OIS, instead of utilizing the fallback under the definitions. The timing of this OIS conversion seems to be at or shortly before the LIBOR cessation. Responding to these discussions, JSCC has hastily initiated discussions with its members, which are still ongoing. Members have raised some concerns with the applications of the ISDA fallback to CCP cleared trades. For example, after LIBOR cessation, new trades referring to fallback rates are not expected. So the fallen back trades will rapidly lose market liquidity. Under such low market liquidity, the unwinding of fallback trades through compression would be difficult. As a result, there will be the risk of a huge amount of exposures remaining for years after the fallback date. Moreover, when the ISDA fallback applies, members will hold positions in both the fallback swaps and OIS. In this case, margins would be greater than only holding OIS positions where all positions can be netted. Also, there is a concern from the CCP's risk management point of view. If a member defaults while holding positions in fallback trades, there might be no one willing to take up such trades. And as a result, the smooth completion of the default settlement process might become difficult. On the other hand, some members have expressed their concern about whether timely preparation is possible if we switch our policy to an OIS conversion method. Some members have been working on preparations with the premise of dealing with the ISDA fallback. From another viewpoint, members using multiple CCPs are requesting that all CCPs use the same method. LCH recently announced its policy to adopt the OIS conversion method as a result of consultation with their members. We would like to decide our policy very soon in light of member comments like those I just mentioned.
Okay, thank you, Hosonomura-san and Watanabe-san. Thank you very much. So actually, I'm the member of the JSCC's IRS steering committee, and for a few years, and I believe JSCC OTC clearing business is one of the most open CCP in terms of the listening CCP's members' voice. So JSCC hosts working group frequently, and it's open to the members and observers. And fallback cessations and the one-time conversions that recently started discussions is the hot topic in the market, but I believe we can manage it with the adaptations of the market's voice. In the other hand, the bilateral markets and uncleared swaps, especially the non-linear derivatives that Watanabe-san mentioned, seems to be challenging, and market participants shall continue to proactively engage on those challenges. Okay, yeah, thank you very much. So let's move on to the next questions. So how prepared is the market? So the expectation to the Japan risk-free rate futures from overseas investors. So I'd like to ask Tomiya-san and Watanabe-san, so both the global FCM and proactively engage with the clients on this topic. So Tomiya-san can go first.
Yeah, so first of all, I completely agree with Yanagisawa-san's comment on JSCC's policy. JSCC is really open to market participants, and JSCC is really good at listening to the market voice. So that's why I'm not too worried about the cleared positions. But in terms of this transition speed, I'm worried about the bilateral trade and also cash and the loans. I have to say it's not as fast as we expected. And just protocol adherence, that was okay. But as Inamura-san mentioned in the first speech, it's just a safety net. And it's like a seat belt. And you shouldn't run into the wall, even though you have a seatbelt. So you need to actively convert your old LIBOR portfolio to new rates. And also you have to do a lot of things like changing the discount rate in the CSA. But that type of active transition or voluntary conversion is not as quick as we anticipated. There are so many challenges on that. We had so many regulatory changes in the past 5-10 years. So we have several netting sets like legacy non-cleared swaps and also non-UMR. UMR is a non-cleared margin regulation, legacy trade, and VMIM CSA new trade under the UMR. And we have also several differences like negative rates floor on the collateral interest, and eligible collateral might be another issue. And initial margin optimization, that's also a headache if we have to move the portfolio around. So if you start talking about these issues with your counterparties, it's very difficult to quickly move to transition or new rates. So I strongly suggest that you should start thinking about this conversion earlier and start talking to the client or counterparties and actively voluntary conversion is the most important in this environment. And cash and loans, especially cash, we have some difficulty in converting or buy back the old legacy trade. And personally, we may need to think about the tough legacy issue like the US or UK, and even talk about the synthetic LIBOR type of solution. It's difficult for us to speaking to the older clients, including retail clients, and add some fallback language or move the trade. That's really difficult. So that's, I think, industry headache. That's something we need to do by the end of this year.
Okay, Watanabe-san, can you comment? And also, please include some essence about the one-time conversions or the mandatory conversions, which Hosomura-san already mentioned, but it's from the global or other CCPs.
Okay, sure. So as I mentioned, first, as far as I talked with the global actually buy-side clients or institutional investors at overseas, everybody actually is looking for is a clear milestone for rival transition in derivative space. But in addition to that milestone, I believe the overseas investors may want to obtain the comfort on what alternative actually benchmark would be dominant in the JPY derivatives market, i.e. TONA, TOF, or TIBOR, under the multiple rate approach. My response to that point as a good student at school is that'll be what everybody in the market will decide based on her or his own needs. But if I had the liberty to rank the orders among the three potential benchmarks, my simple answer is number 1 is TONA, number 2 is TOF, and number 3 is TIBOR in order. I have 2 simple reasons for that. Reason number 1 is need for credit risk-free rate for majority of derivative markets. The cross-industry committee in Japan fully respects the principle addressed by Financial Stability Board in 2014 in this regard. Therefore, TIBOR as a credit-sensitive rate should be ranked as number 3, which is behind TONA and TOF as a credit risk-free rate for majority of derivatives market. Reason number 2 is robustness and resiliency of the benchmark. TONA is an unsecured overnight call rate, which is more robust and anti-manipulative and more resilient under the financial stress compared with the TOF derived from the OTC swaps market in 1 month up to 6 months tenor. My message to overseas investors, therefore, is very clear. Majority of JPY derivative market would reference TONA rather than TOF or TIBOR. I agree with Hiroki on the use of TONA in derivative market, probably limited to the area of derivative hedging for cash product, on which I believe further discussion at the industry level is necessary. In terms of TIBOR, key challenge would be potential migration of Euro and TIBOR Z TIBOR into JPY TIBOR D TIBOR in the future. Given this uncertainty, although Euro and TIBOR Z TIBOR has been more dominant in the derivative market than JPY TIBOR D TIBOR, the use of JPY TIBOR may become popular to avoid any unintended consequences at the time of future integration. In terms of TONA futures, I believe the timing of listing should be not the earlier but the later. I'm against the idea to make the TONA futures listing front run ahead of the OTC trade of TONA swaps because it may result in the benchmark manipulative situation for TOF, as we know the lessons learned in the case of rival manipulation in the past. My view is TONA futures should be listed at the time when the sufficient level of TONA OIS liquidity become ensured. But I strongly expect that TONA future would be listed in the future. At the time when the market liquidity of TONA futures becomes high, it would be ideal that the TOF would be calculated from the combined market data between TONA OIS and TONA futures, which would enhance the robustness of the TOF. So when it comes down to the mandatory conversion from rival into OIS at CCP, as Hosomura-san mentioned, I think my view is the direction is correct, but the execution should be carefully considered. I understand well the rationale for CCP to convert the cleared rival swap into the standard OIS convention immediately before or on the date of the index cessation effective date of arrival. But on the other hand, I think we need to consider that carefully design mandatory conversion from execution perspective. First is consistency among major CCPs because the major dealer holds a CCP to CCP basis trade. Second is the change of payment date. payment date of LIBOR coupon in the LIBOR swap is usually set at the end of the calculation period, but after mandatory conversion into OIS convention, the payment date will shift 2 business days from the end of calculation period. Number 3 is timing of mandatory conversion. Bulk of cleared swap need to be terminated and rebooked as the standard OIS convention with residual cash compensation all at once. That will require heavy operational burden at both clearing member and the customer side as well. That's back to Shun.
Okay, thank you very much, Tomiya-san and Watanabe-san. It's quite insightful, and yeah, as Watanabe-san pointed out, the credit risk-free and anti-manipulation is the original objective of the LIBOR decommissions. And the futures contract is the good tool for the liquidities and transparency with the certain amount of the secured liquidity in the OIS space. So I think it's the great story. So so this time is is close to the end time. So this just final questions. Actually, the message to the audience. So I'd like to ask each panelist to have one sentence, one comment to the audience. So is it okay to start from Watanabe-san, please?
Sure. I expect market participants to get accustomed to use the risk-free rate in the derivative space by the second half of this year, but I believe the real driving force is not the big dealers, but the end user clients for the derivatives. My message, therefore, to the end user client overseas is please get ready for TONA OIS trades as early as possible. And let's go together for transitioning JPY LIBOR into TONA in the derivative space.
Okay, thank you, Watanabe-san and Seo-san, please.
Yes. All the market participants, including us, must be involved with this transition. So, yeah, I noted Watanabe-san saying TONA future is not the earlier, but the late, yeah. Although I mentioned a negative overview of TFX rates futures, but I believe the transition will be a good success, and which will activate the Japanese yen interest rate market again. I would be very grateful if we can help transition. Thank you.
Thank you very much, Seo-san. Okay, so the next, Osomura-san, please.
To be ready for LIBOR cessation, JSCC has been taking various actions such as expanding the scope of eligible OIS and facilitating transition from LIBOR to OIS. As LIBOR cessation at the end of 2021 is highly likely, each CCP needs to determine their transition policy very soon and should be ready on the date of LIBOR discontinuation. While we have been reviewing our transition method, such as is the fallback and or OS conversion, either way, there might be a high burden on our members for the bulk transition of a large number of trades. So we would like to promote members' voluntary transition from LIBOR into OIS in advance as much as possible. We appreciate any comments at any time. Thank you.
Thank you. Okay, lastly, Tomiya-san, please.
So it's just my experience, but when I'm speaking to many people, clients and dealers, sometimes it's better to have a centralized team or project team under top management and push this initiative from the top. Sometimes certain department is in charge of their portfolio, like only cross-currency swaps or only JPY swaps, or sometimes only for the swaps booked under the Japan branch or something. But this is a whole portfolio change. And ISDA CSA, as you know, covers all the transactions in the netting set. And it has impact on the pricing initial margin calculation and bar and risk limit and everything. So I think it's important to have some centralized function, and those function needs to push this initiative as much as possible.
Okay, thank you very much. Thank you very much to the, all the panelists, and I think it was very insightful discussions. So we see that approximately 300 people are registered to today's event, and many of them are from overseas. Thanks to the technologies to remove the physical barrier of the event, the host in Tokyo, and we are the vocal, and through this virtual channel, and we continue to focus on the market development in tandem with you. So if you have any feedbacks to the panelists, please feel free to contact me and FIA Japan. We welcome your opinions, comments, and advice. This is the conclude of the panel discussions. Thank you very much.